Heading towards the end, we can't really hear Alexis really, but hopefully the gist of her message, you all have gotten it. Now, actually, I do echo Alexis' sentiments about trading carefully the US dollar. Yeah, you might be interested if you want to trade the US dollar, you might be interested in checking out the seasonal patterns or even how the US election actually affected USD during the past elections. For my limited knowledge, I am really saying limited knowledge. What I know is that usually when the Republicans win, the USD should rise. When the Democrats win, the USD will be dampened a bit simply because Republicans tend to actually pump more money into the economy. Yeah, so for the short term, that the USD actually benefits from it. Now, the stock market is actually the opposite. I think for the past presidential cycle, usually when the Democrats win, S&P will actually rise more. When the Republicans win, S&P usually actually fall. Yeah, it's kind of funny because Republican is actually more pro-business. If I'm not wrong, please feel free to go check it out and just double confirm my words. Yeah, so there are impacts because the Republicans and Democrats, they have different approaches to the economy. Yeah, but I'm not an expert on that. So, okay, with that, let's go into an area whereby I am much more comfortable with. So first off my list, let's go through a technical analysis for each of the currency indices. So again, the currency indices are just the currency itself. It is not paired with any other currency. So from there, I just simply mark out my support and resistance level, and then I'll go about determining which one is actually strong to trade against another. Okay, the first of my list is actually the Canadian index. Have been maintaining this for months. That the Canadian, I'm on a weekly chart, by the way. This is not the daily, this is not the 4 hour, the weekly chart. So the weekly chart actually gives me very clear cut. Usually give me pretty clear cut as to where I should be trading. So now, I don't think anybody will actually dispute my words when I say that the Canadian index is on a range on a weekly chart. From you see 2022 September till now. Very nice range, right? So price go up, come down, tries to go up, come down. Again, this level has been tested many times. Unless something really drastic happens, I do have pretty good reasons to believe that the Canadian currency will actually strengthen at this level. Yeah, I mean, it may not need a perfect touch, but this is technically, I do expect CAD to actually strengthen. We just need to see which currency we are trading against for us to gain the best opportunity. Yeah, and sometimes a little bit of patience help. So accordingly, CAD is actually have the higher chance of strengthening for the next 2 weeks. Keep a lookout. Now the next on my list is actually the New Zealand dollar. Just to give you a reminder is that the green line, the green and red line is actually the hard support and resistance level, which usually is the whole number, $70 and $60. And then my short term will actually be the white line or the white boxed. Yeah. So against New Zealand dollar, you can see that since last year, May 23 till now, really pretty nice range, right? Yeah. So price is actually fast approaching the $60 level. And you can see that it has actually broken in the past. It's a bit messy, right? So, but I also do have reasons to, pretty good reasons to believe that it will actually strengthen from this area onwards. Now, I do not say this line, this area, you can see that price broke through. So be a bit patient, maybe give it up 2 to 3 weeks, wait for your long opportunity to go up for the key, for trading Kiwi against any other thing. Now, next on my list is recently just updated level. You can see between 120 to 110. Again, whole numbers pretty much amazed at it. Sometimes price bounce off this level pretty nicely, and you can see that this is actually a temporary level, which has worked pretty well in the past, right? So you can see that it goes to 120, comes down again. Like I said, this is a temporary level because its price really range between 1 or 2 bars only. Yeah, so it may fail quite easily compared to the hard levels. Yeah, so for anybody who want to trade against the Swiss, keep a lookout. I would say Monday or Tuesday, give it a rest and see whether the lower time frame, usually I trade the H4, if really bounces off this level. If it does, then I would say we have more confidence in trading the strengthening of the Swiss. Yeah, again, doesn't have much room to run, so don't be too greedy if you are trading long Swiss. Yeah, give it a 2 to 1, 3 to 1. That is enough. At least respect the historical data that it doesn't really want to run very long, but it does have space to do that. Now, really in the middle is actually the British pound. Yeah, so I'm really parked this here. 130 is really a nice hard level for price to actually bounce off. But again, not entirely sure it will actually bounce off or be like this area over here, get whacked back and then comes down again. So in lieu of this, I don't see it as a very clear-cut way for me to trade the British pound. I'll probably just stay out of it. Now, so we have talked about the strengthening of the currencies, middle ground, which I really try to stay out of because I'm not entirely sure. And then I will go into the weakening of the other currencies. So my list, the strongest of the weakest will actually be the Euro indexed. Yeah. Why I would say that, although I would suspect that it actually weakened, you can see that this first top, second, third top, very nice. But it doesn't give me a very decisive bearish close. So as such, I'm not entirely sure that price will actually weaken all the way. It might come back for a retest again of this level, and then it will start to weaken. Yeah. So I would say give it one more week, and then we'll see some clarity whether price really want to get rejected by 110. Now, for the Japanese JAP index, price is still going down, but really it's in the middle of nowhere. Yeah, so you can trade this shorting of yens, but don't build too much of a heavy position. Nothing much to be said about that. Now, DXY I would say is more or less in the same position as the Euro index. Both are in a very nice horizontal level. Price is still within this bracket. It doesn't really have a very nice decisive close, but give it 1 week or so, you might see a very clear either rejection or bounce off this area, and that's where we'll be more, for trend trading wise, it will be better to trade. Now for breakout tradings, then that's actually another story. Yeah, because whenever price comes to this area, it might actually prove to be the start of a very good trending run. Otherwise, again, because USD is in the limelight a lot these days, volatility is really high, you may just wish to skip trading DXY altogether. Now, the clearest of what I can trade in terms of weakening of the currency is actually the Aussie index. Again, compared to the, if you remember, Canadian index, Kiwi index, very nice range. Same thing for the Australian dollar. I'll probably just need to revise this. You can see that price is in a, I wouldn't say nice range. I would say this is kind of a messy range, but clear cut, it is in a range. Right? So you can see that price just last week rejected, now it's coming down. So I will actually follow the momentum, just go and short it. Now when it comes to bottom of this area about 61.5, you may want to relieve your positions ready. Yeah, don't hope for home runs and just try to squeeze out a bit more, because whenever it comes to about 62, it is not so clear cut already. Yeah, but given that this is a weekly chart, for if you trade near here and for price to all the way travel down, this will easily give you a 8 to 1, 10 to 1 kind of trade if you are willing to hold that long. Now, restore connections. All right, so with that saying that, it's very clear cut that I'm going to short Aussie when the opportunity arises. So you can see across my tabs, it's just Aussie. Now, CAD is the strongest, Aussie is the weakest. So naturally, I'm going to position shorting of Aussie. You can see that this may be the formation of the right head and shoulder already. You can see this is the left shoulder, head, price comes down, right shoulder. Yeah. And this is on the 4-hour chart. So from the weekly chart, I've done my analysis. I go to the 4-hour actual trading chart. If price on Monday gives me a pretty bearish move, I may just jump in, put my stop loss right at the high of here, and then build my second position, third position. Or it's a break and retest, and I'll just keep shorting Aussie CAD, right? So this is top of my list. This is a chart whereby I will really look at closely. Aussie Kiwi, again shorting of Aussie. Again, at this point, because of all these same currency that I'm trading, you really want to watch your risk management really. See which one actually give you a better position. Now, Aussie Kiwi seems to me that price is already weakening already. So what I'm waiting for is price to actually weaken further, give me some sort of retracement. Now, the retracement may not be strong retracement. It may be a very weak retracement. Yeah. And then any sort I'm waiting for, not necessarily at this level, I'm willing to actually jump in for a short Aussie Kiwi. And the last of my Aussie shorts will actually be Aussie Swiss, which is actually playing out now. Yeah. So this is actually not as clear cut as the other two. But if there's a clear price action that I can actually jump in, I will do so. Right? So I don't really have a bearish close as of now. In fact, it's quite messy at this area. So if price does give me a pretty nice price action or rejection of this level at 0.579, I will trade it, but I will probably park my stop loss higher at this level instead. And then I can actually trade it all the way down to about 0.56 area. Yeah, it will still give me a pretty decent 4 to 1, 5 to 1 kind of trade. All right, so these are the top 3 charts that I will keep a lookout for. One other chart whereby you may want to consider is actually the pound dollar. So let's do a bit of revision. So you can see that pound is at 130. So now I'll be using the word highly speculative that it will actually bounce off 130. I park pound in the middle. I'm upfront saying that I'm not entirely sure, right? So this is actually a very highly speculative move for me. So if it does bounce off, this is very akin, not akin, this is actually a reversal trading already. Right, I'm just waiting for price to actually give me one push downwards, which gives me a small double bottom, and then I'm willing to trade upwards and ride it long. Right, so this kind of trade, I'm willing to go for 8 to 1, 10 to 1, sometimes even more. Just need to be patient and set it out. Right, and because precisely this is actually paired against USD, highly volatile pair, high risk, high reward. But please watch your risk when you're doing this kind of trading. Yeah, so I'm really more technically inclined, just waiting for it to give me the right kind of signal. Now, if you're worried that if you are not comfortable trading a double bottom kind of price pattern, simply just wait for a break and retest, break of the neckline, retest of this region. You will still be in early enough to actually catch a good move if it ever happens. Ashwin, polar bear style, yes, I am. Maybe worse than polar bear, I don't know what you want to call it, dinosaur style. Alright, so with that, thank you for joining me, Alexis. Today, this is hers is a fundamental analysis, mine is a technical analysis. Hopefully it benefits your. See you. Goodbye.